I've got change for us all. Isn't it? Restart.
Big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure.
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that it's really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another tough
Hello.
Hi, Dewald. What is all this FOMO about? Should I buy Bitcoin now?
Are you smoking your socks? You should rather watch my show. You should rather watch my show.
All right, legends, hope you're all having a fantastic day. It is almost 10 to 11 in the morning here in South Africa. Sun is shining, a bit chilly. It's going into winter. Hope you're all having a fantastic day from wherever you are, all over the world, because I know there's a lot of you watching the stream from all over the world, different countries. And now the question is, what is the next tradable opportunities that I see here? And as per the thumbnail, very, very boring, choppy price action here at the moment. Could it be that the market is waiting for tomorrow, the Fed, the interest rate decision? Okay, will price just chop here sideways until tomorrow evening? Okay, here in South Africa, 8 a.m. before it makes a big move, or will we at least get a little bit of volatility? Because we need volatility, right? We need volatility in order to trade. And this is just an absolute mess here at the moment. Just chopping up and down, chopping up and down. And remember, legends, to smash up that like buttons on your, or the like button on your way in. Who said that? I saw someone's comment said, Mr. NFA, Bitcoin stuck, like button not. Just saying. Definitely. Remember to smash up that like on your way in. And legends, we will go and analyze. There is two specific areas or trades that I'm looking for, but I'm not taking those trades just as yet. As a technical trader, often, okay, I find myself in a situation where I say, not trading right now. I need specific areas to be hit before I will consider a trade. I am not going to force a trade for the sake of trading, okay? If price is confusing, it is choppy, and you don't know which direction Bitcoin wants to move into, right? Sometimes you just need to sit on your hands and let price show you the way. And at the moment, price is not showing me the way. It's just chopping up and down here at the moment. Right, legends, I'm just going to focus on this structure. In this live stream, I'm just going to focus on this structure, and more specifically on this little range over here, where I will be looking for shorts and longs. Okay, remember, legends, I am not a bull, a perma bull or a perma bear. I want to play shorts and longs to the upside depending on how price reacts at certain levels. That's all I'm doing as a day trader, right? I get in, I get out, take my profits, look for the next trading opportunity. Whether that be a long, whether that be a short, I don't care. I just want to take advantage of the market. Okay, right, legends, I was kind of looking here at CVD. And a bit of a mix here at the moment, but looking at CVD, it does look like price wants to fall to the downside. Okay, there is just continuous local bearish CVD building up. So let me grab my pen and show you guys what I'm seeing over here. Look at these two pivots. Okay, massive bullish CVD. You have a higher low on price action and you have lower low on CVD, which shows absorption of shorts. The target is the high. Okay, but then as price moved here to the upside, bearish CVD started building up. Bearish CVD, okay? Also here on white, bearish CVD. Okay, and now price fell here to the downside, and I'm comparing this low to this low, and as price was falling here to the downside, no sign of strength. Ever so slightly bullish CVD, but we claimed the low, so the bullish CVD got invalidated. But what's interesting to me at the moment is when I zoom into the local price action, because remember, local CVD always takes priority over larger time frame CVD. Now we are forming bearish CVD. Okay, higher high on CVD, higher high on CVD. We have a double confirmation, and price is making a lower high here at the moment. The target is the low, right? So as long as price is building up, bearish CVD momentum could continue here to the downside, and between each pivot it could potentially form that bearish CVD driving price to the downside. Right, so a little bit of a mix here at the moment. I'm not seeing any signs of strength, okay? Yes, this could potentially now be a beautiful SFP here from the lows. I'm not going to ignore this, okay? This could potentially now be a beautiful SFP from the lows. But if you did play this SFP, you should already be in this trade with your position protected, not foaming in right now, okay? Because there is now a nice little momentum push here to the upside. As soon as you start hitting resistance, you take profits. Small little scalp, legends, small little scalp. Right, so let us go through the structure step by step. Okay, and remember to smash up that like button. Please check the order book. Right, morning Dewald, your favorite head and shoulders pattern on the higher time frame. Okay, yeah, for the guys that's been following me for a while, you know that the pattern that I hate the most is a damn head and shoulders pattern. I hate head and shoulders patterns, right? I don't like them. I don't trade them. I just trade the local price action based on the areas of confluence and support and resistances, daily levels, weekly levels, monthly levels, naked point of controls. That is how I trade. I do not like head and shoulders patterns. Okay, so thanks for pointing that out, Cole. Dewald, please check the order book, bid-ask ratio, and seems that 90 is going to be supported, or is it a trap? Right. I have never, Reza, I have never traded the order book. I've never, ever traded the order book. It is a trading strategy that I've actually never dived into. And quite frankly, I've never had to dive into the order book strategy. I know that there are many trading strategies built around the order book on how to read it and the orders to the upside and to the downside, but it's not something that I pay attention to. And I mean, I've been trading for many years successfully without analyzing the order book, but it is something interesting that I will definitely maybe do a deep dive into, maybe do some research, and then I can come and present it here on the live stream. Right. I love head and shoulders. I use it every day. Well, what is it called? Head and shoulder dandruff shampoo or something like that. Yes. Hey, Dewald. Hey, everyone. Welcome to the live stream. Prefer the Nozoral strategy. Nozoral strategy. Yes, there are, guys, there are thousands of trading strategies out there. But you need to pick the one that suits your personality, the one that you understand, the one that you've built rules around, and that keeps you successful as a trader. And dare I say, it is always best to know a couple of trading strategies, but you have to master them. Okay, so you start with one, you master that trading strategy. You can then add another trading strategy. I think the problem with most traders when they start out is that they lose money using a strategy and they jump onto the next one. They lose money again and they jump onto the next one. So they never really perfect or master a specific strategy. They think it's the strategy that's the problem, and they keep on jumping from strategy to strategy to strategy. Right, legends. Anyways, I think I've done enough talking here at the moment. Remember, guys, the exchanges that I use is always down in the description. Okay. Weeks, there are still a couple of spots left of people that have not claimed their free $100, but on weeks, okay, the first 100 people will get a free $100 to trade with. Also, the money that you deposit into your features account, 20% will be airdropped into your account to trade with for free. You also get 25% discount on your trading fees. It makes a huge difference, especially if you want to scalp. Okay, and then you also stand a chance by registering with this link to spin the wheel. The more volume you trade, okay, you just trade as you would normally do. You get a chance to spin this wheel for guaranteed prizes. Okay, and then for the bigger traders out there, I know that there are, from the data that I'm seeing, it looks like bigger account holders really love to trade with Bluffin. So here's an exchange for you. The more you trade, the more money gets airdropped into your account. Right, Legends, if you also want to join our Legends Pro community, third link here down in the description. Okay, let's analyze the price action. Let's start with the most obvious trade that I'm looking here at to the downside. It is this level, Legends, the 0.382. What makes this level interesting to me is that when I look at the liquidity heat map, okay, let me just swing my head the other way. There we go. Right. At the 0.382, you can see that there's a bunch of liquidity lying here to the downside, and that is in confluence with the 0.382. Right, $92,000, 300 more or less, and this liquidity dips all the way down to around about $92,000, 900. So it's slightly above the 0.382, but you usually, when you dip into a liquidity pool like this, you get a reaction, and I want to trade the reaction at that level. Okay, so to the downside, swing myself back, right? There's liquidity building up below these lows, okay? Everyone's speculating on a breakout here to the upside. Where do they put their stop losses? They put their stop losses below these lows. Obvious places to put stop losses, okay? And I want these people to get stopped out so that I can then play the long to the upside, right? So the first obvious trade that I'm looking for is a dip below based on the bearish local CVD that's also building up, and I want price to dip below this level, okay, and get acceptance back above. This is where I will trigger along with my stop loss below the low. Okay, now you've eaten up all the liquidity and you could get a nice bounce from this zone until you start hitting resistance again. So I'm only looking to benefit from that little momentum to the upside. I'm not saying that this trade is going to do this. It could, okay, that's why you leave some of the position open. It could, but I'm just looking to trade this little momentum here to the upside. So the obvious level is purely from a Fibonacci perspective, looking at liquidity. Okay, it looks like a nice little juicy level to the upside. We have not tapped the 0.382 from this momentum that we created here on the 20th of April to the high of this structure. We have not tapped this level just as yet. Okay, and usually when you tap a major trend, the FIB retracement level, which is the 0.382, you get a nice little reaction. Okay. That is a longing zone that I'm looking at. One thing that I do want to highlight is that when I switch on my stuff, okay, my support and my resistance boxes over here, it has to be said from a volume perspective, when I switch on the VRVP, for example, okay, there's not a lot of volume at the 0.382. So you could potentially get that bounce where you dip into that liquidity pool, you get the bounce and you get continuation to the downside because there's not a lot of volume to support that bounce. It just has to be said. I just want to point it out. There's not a lot of volume supporting this FIB level. But based on the reaction, I could potentially enter a successful trade with good risk management. When you hit resistance, you take profits, you get in, you get out with good risk management. You wait for the next level. The 50% here to the downside has these little boxes that's sticking out here from a volume perspective. So the first level to the downside that is actually supported with a little bit of volume that could give us a bigger bounce is the 50%. Also in confluence with this consolidation area over here. Okay, so this bounce could be a bigger bounce, right? A bigger bounce. And then maybe it makes a lower high, and it rolls over again. So I just want to take advantage of that move. But guys, I don't want to dive that far into the future. I just want to focus on the levels that's closest to where price action is at the moment. This is the closest level. And then from a resistance perspective, we have this level over here, which I'll talk to in a moment. Okay, let me just clean up the chart, clean up the kitchen. Okay, so legends, let me switch off the VRVP. Someone asked me for my settings yesterday on the VRVP. I'm not sure if that person, Jack, I think Jack, if I'm not mistaken, you asked me for the settings for my VRVP. Well, here you go. Let me share the settings. Okay, you can just take a screenshot, pause the screen over there. There's my row size 250, value area 70, style. I think it's pretty much default if I remember correctly. I haven't changed anything on this screen, but you can just take some screenshots of the settings and make sure that yours looks the same. And all I basically did with the settings is I made these bars smaller so that I can identify the volume nodes a lot better. Okay, because I think the default setting has like really thick bars. It has like thick bars, and then the point of control jumps around and you can't see these little spikes in volume, for example. Okay, so that is why I increased the row sizes. Okay, legends. What also makes this, okay, I want to stick to this level. I just want to finish the analysis on this level over here quickly. What makes this level also interesting to me is that if I take a trend-based fib from the high to the low of the structure to the current high that has been formed, okay, just a normal fib, trend-based fib pool. Because this could be an ABC, this could be a complex corrective structure in a B, and this could now be building another impulse here to the downside. This could be an ABC, this could be a WXY, I don't care, it's a three-wave structure, right? So this is the fib pool that I'm using. Okay, so to the downside, now let me zoom in so that everyone can see the level, okay? If this is, I think I actually have it marked out, a WXY that is forming here to the downside. Okay, let me switch on the lines so everyone can see the structure that I'm looking at. If this is forming a larger three-wave structure to the downside in a WXY, the first target for your Y wave is the 0.618 in confluence with the 0.382. If there's, remember guys, if there's no reaction, if it doesn't dip below, it gets acceptance back above to enable me to enter a long trade, no trade. Okay, next level is 786. Also a very common Y wave target. The most common Y wave target is at the 1-to-1 together with the 50% Fibonacci. So you can see how the targets are starting to line up with other areas of confluence as well. Okay, although we could get a bounce in this zone, I do like, from a technical perspective, I like this level more, because when I switch on my point of controls, we also have a naked point of control that has not been tapped in the zone. Okay, if I just move the box, you can see that we have a naked point of control. You have the 50% Fibonacci, you have the 1-to-1 extension, which is a more common three-wave structure target. Okay, so no reaction, no trade. Reaction, trade. Okay, basically the same rule apply at every level. So to the downside, if price does fall aggressively, these are the zones that I will be looking for potential scalp trade back to the upside. Until you start hitting resistance, you start taking profits. And this could be forming a WXY here to the downside. Who knows, right? This could be the bounce that takes you even to go and claim the all-time high. Right, but not guaranteed. You have to pay yourself when you start eating resistance and leave a small moon bag open for higher levels. Okay, if price, now we need to discuss another scenario over here. What if price does not claim the lows? What if the corrective structure is done in an A, B, C? The corrective structure is done for this impulse. Okay, we have to play out that what if scenario. We spoke about it yesterday, last night in the live stream. We spoke about it as well. Okay, let me take out the WXY. Let me clean up the stuff. Take these levels out the way. Okay, legends, the bulls still have a chance. I might add a slim chance, okay? Because when I look at CVD, it is incredibly bearish. Look at this. Look at this bearish CVD building up here more locally. So could the bulls have a chance? Let's see, right? I just don't like to see bearish CVD and longing from that specific zone where price is at the moment. Okay, it's just not, it's not a sexy trade. It's not a sexy trade, but we need to give it the benefit of the doubt. If this is, okay, well, this is a 5-wave structure here to the upside, which could have completed the bigger 5th wave to the upside on the 2-hour time frame when you look at the whole structure from $74,000. So if the bulls have any chance, when you take a fib from the low to the high, remember the rule, okay? Price action is not allowed to take this low. This is what we discussed last night. Okay? It's fine if price dips below, grabs the liquidity, then moves up, but does not take this low. So I have to entertain a bullish case scenario that the bearish CVD building up here more locally, okay, well, would have played out, especially if it claims this low. Then it means that all the bullish CVD has played out. Okay, so I will consider an SFP from the low for a better entry and for better risk management. What do I mean by that? Okay, so there's your low. For me to catch the best entry, and if it's not going to come to these levels here to the downside, there is a potential front running that could happen over here. Price dips below, it does not take this low, and it starts trading back above this low. Now that is a really good risk management trade, whether you put your stop loss there or whether you put your stop loss below this week over here. Okay, this is a swing failure pattern. They do sound easy when I talk about them, but they are often, okay, they become a little bit complex because you get those double bottoms, triple bottoms to the downside. Right, so locally, this is a long trade that I will be waiting for. Okay, remember, no reaction, no trade, because if it just waterfalls from here and you have limit orders set over here, okay, how do you manage your risk? It's not my style of trading. Okay, right. I have to acknowledge that there is some bearish CVD building up, but now what makes the structure interesting here to the upside is there's an obvious trend, legends. Okay, let me switch on the trend. I've adjusted the trend ever so slightly because this trend, boy oh boy, it has a lot of touches over here. A lot of touches, and that was a little bit of a fake out. It left wicks to the upside. The body's closed below the trend, so that was a fake out. And what another way to get into this trade is you could say, I don't care what happens here. I don't know how to play swing failure patterns, not my cup of tea. I'm going to wait for the trend to break. Okay, so maybe price does whatever it needs to do and then it breaks the trend. You know where to put your stop loss. And then to the upside, you need to start paying yourself when you hit resistance. Okay. I will only turn bullish in terms of claiming this high. If price has any chance of claiming this high, we need to take out this little pivot over here. We have to take out that pivot because this could be a 1-2, 1-2, and it's going to just roll down here in a 3-4-5-4-5. So this pivot becomes very interesting, okay, to almost confirm that you could, with higher probability, get momentum to the upside. So there's a couple of ways to get into this trade. You wait for the break of the trend, you play the SFP from the low, or you wait for lower levels to the downside that we've just identified if there's no reaction at these levels. Okay, but price needs to show me the way. How I plan to get into this trade is I would like to see a breakout. I'm going to sit on my hands. I'm not going to do anything, and I want this level to be claimed. Specifically that pivot. I want price to claim this level properly. And the retracement is where I want to get into a trade. Maybe there's a nice little trend building up there. You're taking a fib from the high to the low, the golden pocket, maximum 786 level. This is where I plan to get into the trade. You've now made a higher high, so you're starting to break local market structure. Once you've made the higher high, you expect a higher low. You enter with your stop below the low, right, targeting the highs. but I will only consider this long trade if this pivot gets claimed. Okay. Another way that I could consider a trade over here is, well, if it does successfully break out over here, this definitely becomes a TP area. Okay, because you might not claim that pivot. This naked point of control at the 50% Fibonacci definitely becomes a TP area. Right, I actually need to do this. Let me take the scribble here out the way. And you now need to take your fib from the high to the low. Okay. If I switch on my stuff, now we have clear areas of resistance to the upside. Okay, so let's say this plays out, this becomes a TP zone. Definitely a TP zone. If we claim this pivot, I will be aggressively looking for a long in this zone with the retracement. Okay. Obviously with good risk management, not risking more than what I can afford to lose, and usually I risk like 1 to 2% of my portfolio depending on how good things looks. If I get nice bullish CVD building up against these two pivots, definitely that's a trade that I'm interested in. Okay, that's where I will typically, instead of 1%, maybe deploy 2% of my capital, especially if there's bullish CVD and I can tick off more signs of strength. Okay. Because once you've claimed this pivot, you increase the probabilities that you could go and claim the high, right? But I'm just that type of trader, right? You take profits, maybe you load up, you take profits, okay? You take profits, and once you claim the high, you can close your position, or, because we do have some resistance here to the upside. We have a naked point of control. I think we have a daily level there to the upside as well, if I'm not mistaken. There we go. Yes, naked point of control, daily level. This is definitely, if I am in a long position from here or from here, this is definitely an area where I close my position. I mean, because this is a beautiful trade here to the upside. Okay, so locally, legends, for me, I have to give the bulls a chance over here. It looks like they're really trying to defend this low. Okay, really trying to defend this low. There is that chance that it maybe grabs the liquidity below these lows. This low is still protected. Okay, you get that swing failure from the lows, it breaks out, and then the next important zone is that little pivot. Okay, once we claim this little pivot over here, then you could say, okay, now we're starting to increase probabilities that we could go higher and even go and claim this high. But until such time, okay, if price rolls over before we hit that level, then down we go. Okay, you can see how beautifully we rejected here by the 0.382, by the way. Okay. Right, legends, that is locally what I'm basically looking at. I just want to make sure that I didn't miss anything. We've spoken about this level, okay, the fib retracement to the downside. Pay attention to these levels, okay. Let me switch off my stuff, okay, because this could be forming a larger three-wave structure to the downside, okay. 0.618, 382, 786, 1-to-1 extension, very common three-wave structure targets, especially this little bad boy over here, okay, where I'll be looking for longs. If we do not tap these levels, and this was an A, B, C here to the downside, okay, I must say this is a very difficult structure to count from a bullish perspective. Really choppy, overlappy, okay. I'm not going to go and kill myself trying to count this little structure on the smaller time frames. It's not a convincing bullish structure for me at the moment. It looks like it wants to go and just, dip below, because, when you make a low and you want momentum to continue to the upside, you need to see a 1, 2, 3, 4, 5, or you need to see a contracting diagonal, okay, or you need to see 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. I cannot see these structures inside of this range. Very, very choppy, confusing price action, and that's why I said in the thumbnail, guys, that we need price to show us the way. So typically what I would do in a situation like this Okay, because I don't force trades. If there's no trades and it doesn't apply with my rules and I can't see the clear price action, I sit on my hands and I wait for price to show me the way. Let price fall if it wants to fall. Then I become interested. I will have my alarm set. I will go do something else. I'll clean the garden. I'll mow the lawn. I will wash the dog. Okay, pet my wife. Do whatever I need to do, and until my alarm goes off, that is when I come and sit in front of the charts and pay attention. So I will have alarms in this zone, and I will have an alarm in this zone. Okay, and maybe an alarm on the trend as well to see what's cooking over there, right? But the two obvious trades that I am waiting for is that we need to claim that pivot, and this is why my alarm needs to go off. Once we claim that pivot and there's a nice little retracement, that is where I become interested to trade along to the upside to potentially go and claim the high. Okay, if my alarm at the bottom goes off, then I know there's a potential longing opportunity back to the upside until we start hitting resistance again, revisiting the scene of the crime that we've just lost, completing a three-wave structure potentially here to the downside. Okay, so that is what the market sometimes gives you. Sometimes the market gives you price action that you just have to sit on your hands and wait. You have to wait for price to show you the way. You do not have to trade every single day. You do not have to force a trade. I don't know if I'm sure a lot of you, have heard these words. Don't force a trade. Don't overtrade. If price action is confusing to you, sit on your hands. Let price show you price action that's not confusing. Okay, if I cannot apply my trading strategy inside a messy zone like this, I just don't trade. I wait for price action to show me the way. And this is something that a lot of new traders, I don't think you guys, you guys are the diehard fans here inside of the live stream. Okay, you are here when it's bearish, you are here when it's bullish, and right, legends. But the dumb retail money, the people that are not here on the live stream, they think that they have to trade every single day. They will be forcing trades inside of this zone, and they will lose most probably a significant portion of their portfolio. Okay, because they think that they have to trade. They're forcing the trades. They get stopped out. They're not, oh God, I thought it was going to, okay, now it's bullish CVD, now it's bearish CVD. Like, no, guys, just take a chill pull, relax, let price show you the way. If you have a successful trading strategy, trading this range, by all means, nothing wrong with that. Okay, but if you have no clear direction in terms of where price is going to next, and you are forcing longs and you are forcing shorts over here, okay, you could be bleeding out your account faster than what you want to. Okay, cool, legends. That is basically what I'm looking at. Something very interesting just for shits and giggles that I wanted to highlight over here is, I know this is very small, but I was just playing around this morning looking at the S&P 500 here at the bottom. Since 1932, I was looking at the S&P 500. Since 1932, which is over 90 years, 93 years, the S&P 500 has been going up. Just up. Right? Yes, there's been pullbacks along the way, but the general trend has been up. So in the last almost 100 years, it's always been in your best interest to look for longs. Okay, the trend is up. And Bitcoin is only here. Okay, this is when Bitcoin was initiated during 2009, 2011. Well, that's the only data that I could find. The latest data here only starts on Coinbase from the 1st of March 2012, but I remember reading about Bitcoin in 2011 and even in 2010. But it's only the start for Bitcoin over here. It's still a Mickey Mouse compared to the S&P 500 that's been rampaging year to the upside for almost 100 years, right? But what was interesting to me is that the S&P 500, okay, let me just take the scribbles here out the way. Okay, we are still early, guys. This is the point that I'm trying to make over here. We are still very early, because also when I measure from the bottom of 1932 to where price is at the moment on the S&P 500, that was 118,000% return. 118,000%. Okay? If I go to Bitcoin and I measure it from the bottom over here to where price is at the moment, it's a 3.9 million percent. Okay, so you can see Bitcoin is already outperforming the S&P. Bitcoin has done 35 times more than what the S&P has done in the last 100 years. So from a long-term perspective, long-term investment perspective, right, it doesn't matter. Let's say this was Bitcoin over here. It doesn't matter where you bought over here, whether you bought at $100,000, whether you bought at $200,000, okay, compared to where Bitcoin could be in the future. Okay, so for people from a spot bag perspective, in 10, 20 years from now, 30 years, or even 40 years from now, no one is going to care whether you bought Bitcoin at $100,000 or $87,000 or $110,000. From a spot perspective, in 10, 20 years from now, when Bitcoin is potentially at $5 million or $20 million, I don't know where it's going to be. It's insignificant where you bought. I think, the conversation is most probably going to be around, I bought Bitcoin around about $100,000. Okay, so for those people that are very concerned about the DCA portfolio, buying a little bit of Bitcoin, are we going to make one more high? Are we going to make one more low? Are we going to $50,000? Are we going to $60,000? Are we going to $100,000? It's insignificant from a long-term perspective, especially if you're building a portfolio for your generations to come, okay, for your kids' kids, or you have a long-term portfolio. Maybe you're still young, maybe you're in your 20s or in your 30s, and you're building up a Bitcoin portfolio for the next 20 years. It's insignificant where you buy at the moment. That is potentially why Michael Saylor is buying here at the tops. He's absolutely crazy. Why is he buying the top over here? We're going to get a correction. Okay, when you have long-term thinking, you don't care because you are thinking about this picture. You don't care where Bitcoin is right now because it still has a long journey ahead of it. Right, cool, legends. That's basically what I wanted to discuss here at the moment. I see, also we're just chopping here by this daily level, not really respecting this level. Chopping through, in, upwards, downwards, sideways, not really respecting this level. It's not really holding its ground at the moment. Okay, right, let me go through some comments. Yes, I mean, the older you are, you're like, am I still going to make life-changing returns before I kick the bucket, right, Rix? Adoption is at 5% of the global population today. Yes, definitely. With a reserve and regulations within the 10-15 years, adoption will be at 50% increase in the market cap of BTC by 1,000%. Yes, and I think, a BTC is also one of those tokens that has a limited supply. Okay, there's a very motivational, inspiring talk that Michael Saylor did when he basically goes in and explains why he is buying Bitcoin. Why is he so bullish? The studies that he's done, dissecting the white paper. Right, it's really inspirational. It just makes you want to sell your wife and your house and stay in a tent and just invest everything in Bitcoin after you watch that podcast or YouTube. I can't remember. I'll need to find it and maybe I'll share it here on the live stream. And okay, but I mean the fact that Bitcoin has already outperformed the S&P 500 by over 30x in its short little lifespan, okay, tells you, limited supply. It's gonna, we keep on mining Bitcoin is gonna run out. I think by 2041, if I'm not mistaken, the last Bitcoin will be mined. I can't remember the exact number. I'll also share that in the next live stream. Okay, and when something has a limited supply and there's a demand, there's only one direction that price can go into. If there's a limited supply, remember guys, if you have 10 apples and 100 people want your 10 apples, what's going to happen? You're going to raise your price. Okay, it's not 5 Rand an apple anymore. It's now 1,000 Rand an apple. Okay, too many people are still interested. It's now 10,000 Rand an apple. It's now 50,000 Rand an apple. Okay, Demand and supply, that's basically what it boils down to. Right, so very interesting. Rix, thanks for sharing that. Okay, Dewald, check out the correlation between Bitcoin and the global M2 money supply. Danny, I have done that. Okay, global money supply, do I still have it here? Is, I need to go to the daily time frame. Okay, global money supply is, we all know, I have shared this last week during my live stream. Let me just clean up the levels. Okay, is on the up move. Very, very aggressively here on the up move. Okay, the question is it going to follow suit? Okay, I do know that nothing moves up in a straight line. So, you know, maybe it finds a little bit of correction, then it moves, you know, catch up. But the global money supply is already at $150,000 if I compare it to Bitcoin. So potentially that could be a target, right? Where Bitcoin can potentially, this is a 1, 2, it goes up for 3, 4, 5, who knows, right? It's interesting to look at this, but this is not what I trade. This makes me bullish long term. This makes me want to just, you know, take the spare cash that I have every month and the money that I make from a trading perspective, the money that I don't need for living expenses, you know, buy some Bitcoin. It is the king of crypto at the end of the day. If you buying meme coins and all these shit coins that gets launched every single week, investing in them long term, then you are smoking your socks. If you are buying Bitcoin from a long term perspective, okay, there's some sense in your madness. Right. Mister, when you say you risk 1 to 2% of your portfolio, do you mean your margin or your stop loss? Stop loss. Okay, it's a very good question, Salty, and I get asked this question a lot of times. Okay, let me clean up the chart because not a lot of people understand what I mean by this. If you take your long tool, okay, it can be long or short, right? You want to play a trade, you have to make, guys, first of all, you have to make friends with this tool. If you are trading without using this tool, I don't know how you're successful as a day trader, right? Because this tool is extremely powerful. It helps you to plan your trades. This tool tells you your risk to reward, okay? I do not trade a trade that doesn't have a risk to reward more than 2. I'm not going to risk $50 to make $50. Ain't no way. I want to risk $50 to at least make $100. That tells me it's worth putting my money on the line. The higher the risk to reward, the better. Okay. The other thing that it tells you is it tells you the 3 W's that I always talk about. Okay. And for those of you that's been following me while you're like, okay, yeah, goes Dewald again. Okay. Why are you entering the trade? You have to know. You have to tick your why. Where is my risk management? Where am I planning to take profits? And you could have profit taking zones inside of this zone as well. Okay, TP1, TP2, you close your position. If you cannot answer all 3, where am I taking profits? Why am I entering? And where is my risk management? You should not be taking the goddamn trade. If you are still trading today without answering all 3 W's successfully, and you are entering a trade and you are asking other people, where are you planning to take profits? Where are you planning to put your stop loss? You should not be trading. You should not enter the trade. Okay, that's the rule for this little picture over here. Okay, let's discuss the risk management here quickly. So if your stop loss, let's put it exactly 1% away, the stop loss. Okay, now the stop loss is exactly 1% away. Let me zoom in. It's quite a beautiful trade here to the upside, right? Let's zoom into the structure over here. So what it means when I risk 1% of my portfolio, okay? It means that if I get stopped out, if I enter a trade over here, because now I'm playing along to the upside, and here's my profit taking area, my stop loss will never exceed 1% of my portfolio. So if you have $1,000 portfolio, you should not lose more than $10 at every single trade. So at a 1% stop loss, you could risk 100% of your capital at 1x leverage. Or you could trade with 1% of your capital at 100x leverage. It's the same thing. It's the same amount. Okay, 1% of 100% or 1% of your capital at 100x is still $1,000. Do you agree? Okay, the end result is the same. And that's why I always say, people going ballistic about, yes, did you see how much leverage that guy used in his trade? Okay. Yes, he used 200x, he used 400x. Leverage doesn't matter. You do not know how much percentage of that person's capital he deployed in that trade. You do not know how far that person's stop loss is. Okay. Because if your stop loss is 1% away and you are trading at 100x, it means if price turns against you, this is where your position gets liquidated. So a smart trader will make sure that his stop loss is always above his liquidation price. If he's trading with 1% of his capital, whether that be 200x, 400x, if your stop loss is going to get hit before your position gets liquidated, then you're a smart trader. Okay, you cannot let your liquidation be your stop loss. Okay, from a psychology perspective, it really messes with your mind. There's a big difference between being stopped out because you planned the trade properly or just being liquidated because you were hoping for the best. Right, and you applied 500x and you were just like, yeah, if I win this trade, then I can show off to everyone. Right, so basically, salty, that is what I mean. Okay, so sometimes I will risk, most of the times, I will risk 100% of my portfolio at 1x leverage or 1% of my portfolio at 100x leverage if my stop loss is less than 1% away. If my stop loss, for example, is, let's say, 0.4% away, I can trade with 1% of my capital at 200x leverage. But if I get stopped out, I still only lose 1% of my portfolio. Okay. Right, that's the simplest way that I can explain it, guys, legends. The more experienced you are, the more you can risk. The most that I have ever risked on my portfolio is 5%. Meaning, if my stop loss is 1% away, I have traded with 100% of my capital at 5x leverage. That will only happen maybe once every 3 months, once every 2 months, when I have a high tradable setups. The planets are aligning. I got bullish CVD, the RSIs, the MACDs are crossing, everything just aligns for you to, it screams, okay, it's either going up or it's either going down. That is where I will deploy 5% of my capital. Most 99% of my trades, okay, is between 1 to 2% that I risk. Okay, and then there are also a lot of trades where sometimes I'm not sure, okay, I don't have all my boxes ticked, and then I will risk 0.05% of my portfolio, meaning that I will trade with 50% of my cash at 1x leverage, or 0.5% of my cash at 100x leverage. Hope that makes sense. Cool. Legends, remember to smash up that like button for the education. There's not a lot of people that teach proper risk management from a trading perspective. Okay. If you are trading with 100% of your capital at 50x leverage or 20x leverage, I can almost guarantee you, okay, you're going to struggle. You're going to struggle as a day trader. Okay. To consistently make money week after week, month after month, and consistently show profits in the long term. If you are trading with your entire portfolio at 20, 50, 60, 100x leverage, you might get lucky a couple of times, okay? But in the long term, you're going to lose your account. Okay, right. Dankie meneer, it's an absolute pleasure, man. Groot plesier. You are hidden gem Dewald. Thank you for the knowledge, my guy. It's an absolute pleasure, man. I love education. Okay, I just really love educating people on how to trade, and hopefully you can take some of the tips and the tricks that I'm sharing here on my live streams and perfect your own trading strategy. Okay, because we all have our own trading strategies. Okay, you might not like certain aspects of my trading strategy, and you can adjust it to how you like it. You can apply your own rules. Okay. Right, legends, thank you so much for joining the live stream. Remember, the links for the exchanges that I use is also your way to support the channel and for me to continue to come here day after day, right? You qualify for the biggest sign-up bonuses and lowest trading fees, and it costs you nothing extra. I've got Weeks and Bluffin, and an exciting new exchange that's also coming up. I'm just doing some back testing, making sure that it all works perfectly fine, right? Because I don't want to present an exchange and I don't like to trade on it. So currently trading on a new exchange that I'm testing out. Legends, thank you so much for joining the live stream. I will see you all a little bit later, and until then, cheers for now.